Welcome back. As you know, I'm Eli the Computer Guy here for the Daily Blob, where I shake my brain nipples every day in order to get some of that YouTube money to pay for your education. Because that's how capitalism works. That's how capitalism works. Anyways, I come here to scream about stupid shit on YouTube so that I can pay for Silicon Dojo. Silicon Dojo is free to the end user, hands-on technology education that empowers you to do whatever the hell it is that you want to do. Having a first class in Durham, North Carolina in quite a while next week, and we're going to be having more coming up. So if you're interested in that, go to silicondojo.com to become a member. And so now let's talk about some stupid things. Yay, we did it! We did it! OpenAI is finally a $500 billion company. We've been talking about it for a while, but now it's official. Obviously, the American system is working. If you have a heart attack, there's an 80% chance you'll go bankrupt. But don't worry, OpenAI is worth $500 billion. So yeah, this has finally happened. I've been talking about the valuations of these AI companies for a while, and I've actually been talking about OpenAI being worth $500 billion for a little while. But apparently that wasn't quite the case. They were working on the round to get them to a $500 billion valuation. That round has now officially closed, and so they are now in the $500 billion club. They are truly kings of the stupicorns. So we go take a look at CNBC. I think this is interesting. It also makes me ask a couple of questions. It makes me ask a couple of questions. OpenAI wraps a $6.6 billion share sale at a $500 billion valuation. So they've been getting money for a while now. Again, it gets confusing. There's like this whole $40 billion round. Anyways, here's some more secondary share sales. OpenAI has finalized a secondary share sale totaling $6.6 billion, allowing current and former employees to sell stock at a record $500 billion valuation, according to a person familiar with the transaction. I do think this is kind of an interesting thing to take a look at for a lot of these stupicorns. So I've been talking about it, right? Back in like 2012, they came up with the idea of unicorn, right? A startup company worth over $1 billion, right? That used to be called a unicorn because it was so rare. Anyways, so again, it's still a private startup company, so it's not has not IPO'd. You cannot buy the stock, right? A couple years later, they came up with a decacorn because then companies got to be worth $10 billion. So you had to come up with a name for that. My name for a lot of these AI companies now are stupicorns once they get to be worth over $100 billion. And I think there's an interesting problem there for a lot of these companies because one of the things that these companies offer, the real thing that these companies offer to their employees, especially their initial employees, is equity, right? Basically, shares in the company, ownership in the company. They don't get votes. They don't give votes. Don't think about that. But the idea is that when the company IPOs, goes on the open market, then they will be able to sell their shares, right? So the initial employees at Facebook, they may have gotten 10,000 shares back when the shares were worth $1, right? They got 10,000 shares. Facebook IPOs, they're now like $400, $500 a share or whatever. So theoretically, the Facebook employees can sell, and instead of having $10,000 worth of equity, they can get $500 times 10,000, whatever the hell that ends up being, right? And so that's one of the big things for a lot of these companies is that they're offering their employees not just salaries and benefits, but they're offering an equity stake. The issue that you run into then is what happens when these companies just don't fucking IPO. Like, you gotta understand, like there was a time period where most of these tech companies IPO'd pre-$500 million valuation. And that was one of the reasons, like talking about a unicorn company, like the whole idea is that one of the reasons they were unicorns is because they should have IPO'd already. Right? So basically, you're an employee, you have equity in the company IPOs before $1 billion, and then you decide what to do. Do you keep the shares and wait for the value to go up if you think it's gonna go up, or do you sell the shares and then you go buy a house, right? That's your decision point. Here's the problem. What happens when these startups never stop being startups. This is one of my problems. Like, what happens when the startup community starts having Peter Pan syndrome, where they never stop being startups? Again, one of the big issues that's going to come up for these stupicorns is what happens when the valuations never make sense. Never fucking ever make sense, right? If you have a $500 million company, you have a $500 million company that IPOs, right? It may be a little weird, it may be a little wonky, but investors look at it and go, you know what? I don't know, if you squint at it the right way and macro forces work out, maybe this company could be a $10 billion company, right? It's like, am I that confident it's got a 10x or 20x? Not really, but maybe it will, right? I got, if you've got your portfolio of investments, you've got like 5% of your portfolio you put on high risk investments. It's like, I like the CEO of the company, I kind of like what they're doing. Let me take a sliver. Let me take 1% of my portfolio. I'm going to dump it in that company because who knows? Maybe great things will happen. Here's a problem. What happens when the startup's worth $500 billion? What happens when they IPO, their IPO, and they have to get more than a $500 billion valuation? So the idea is a 10x of 500 billion is 5 trillion. 5 trillion. So one of the problems these stupicorn companies are going to have is they're going to have more and more employees that have equity in the companies as the IPOs get pushed further and further out, and as the question about the real value of the companies become bigger and bigger and bigger. And so that's where you get these secondary share sales. The idea being is while the company is still private, that the employees are allowed to sell their stock to other investors to try to get some money out of it, right? So if they came in and the share, the OpenAI was worth $1 billion at the time, is now worth 500 billion. They have so much equity, they're able to sell some of their equity to actually get some of that value. And I think this is going to be an interesting thing that's going to happen in the tech industry is what happens when just an insane amount of tech employee wealth is tied up in equity that becomes illiquid. I mean, think about that. For a lot of these tech employees, their real wealth is in the equity in the startups or the companies that they work for. What happens when that becomes illiquid? It's a curious question. Anyways, so OpenAI has finalized a secondary share sale totaling $6.6 billion, allowing current and former employees to sell stock at a record $500 billion valuation. CNBC reported in August that OpenAI was looking to conduct a secondary share sale at a valuation of $500 billion with investors including Thrive Capital, SoftBank, Dragoneer Investment, Abu Dhabi, and T. Rowe Price. While OpenAI has authorized up to $10.3 billion in shares for sale, an increase from the original $6 billion target, only about 2/3 of that amount ultimately changed hands. That's also an interesting thing too, is so with this, weirdly enough, they can authorize how many shares the employees are able to sell. Anyway, so they authorize up to $10.3 billion in share sales by employees. Only 2/3 of that actually change hands. So instead of $10 billion in shares being sold by employees, only something like $7 billion, actually, or $6.57 billion. The person briefed on internal discussions said the lower participation is being viewed internally as a vote of confidence in the company's long-term prospects and a sign that investor appetite remains strong even at a $500 billion valuation, up sharply from $300 billion earlier this year. They have supposedly increased in value $200 billion in less than a year. But that's I do wonder if this is the first of the cracks in the facade of AI, this whole AI race. So they authorized up to $10 billion in sales. There was only $6.5 to $7 billion in sales that was actually accomplished. Now there's two reasons that could have. There's two reasons. Right? One could be that the employees just didn't want to sell, right? The employees see the $500 billion valuation and they say, fuck you, I'm in this till $1 trillion. That's one reason, right? Because it's buying and selling. If people are not willing to sell, then the other party can't buy, and so that's why you have fewer sales than you expect. Or the people that were willing to buy were only willing to buy 2/3 of what was available, and the rest simply was not able to be sold. The curious thing, at least in this particular article, is they're not differentiating that. They're just simply saying, oh, 2/3 of what was allowed to be sold was sold. So that shows that there is still appetite for OpenAI at a $500 billion valuation. So that's a success. It's like, maybe. Ooh, maybe it's a limited success. Maybe it's companies finally starting to back off a little bit. I don't know. I think that's kind of like one of those things to be pondering there. The offer was presented to eligible current and former employees in early September, with participation open to those who had held shares for more than 2 years. The share sale marks OpenAI's second major tender offer in less than a year, following a $1.5 billion deal with SoftBank in November. So anyways, there you go. OpenAI is officially worth $500 billion, right? This was decided from a secondary share sale by the employees. $10.5 billion was on offer. Only $6.5 to $7 billion was actually sold. Does that mean the employees have that much confidence they were unwilling to sell? Or does that show that maybe the market is starting to soften, if ever so slightly? It'll be curious to see where this goes. My big problem with all this, these valuations are just too fucking high. They're just too fucking high. And what you got to understand, like OpenAI is one. OpenAI is one of these companies, right? XAI is worth $200 billion. Anthropic's worth $185 billion, right? You got NVIDIA worth $4 trillion. Right? If you said this current generation of AI companies, the new AI companies that have come out in the past 10 years, they're worth $500 billion in total, I'd be like, okay, that's fair enough. Still think it might be a little high. But fair enough. But when you say one OpenAI is worth $500 billion, I got some questions. So anyways, what do you think about this? What do you think about OpenAI's share sale? Is this a sign of strength, or is this a sign of the beginning weakness? Put your thoughts down below. If you like these videos, give us a thumbs up. If you hate these videos, give us a thumbs down. Call me amazing, call me a dumbass. Just be a real Lutnick and do it down there in the comment section. Do remember Silicon Dojo is what the hell I actually care about. We do in-person, free, hands-on technology education that empowers you to do whatever the hell it is that you want to do. First class in a long time is coming up in Durham, North Carolina next week. That is all full. 49 people signed up for a classroom that holds 35 asses. We're going to see how that works. So that class is already full up, oversubscribed as they say, but we will be having more classes in the future. If you're interested in that, sign up for silicondojo.com as new classes are scheduled. And with that, see y'all later.